Hey everyone, thanks for joining us on our weekly recap. I'm YYC Trader, head of news at the Defiant, joined by Jeremy Nation and Owen Furnau, our reporters who put out the excellent content that you see on our site every day. And well, what a week, right? Lots to talk about. We have Bitcoin crossing 31K for the first time since June of last year. So, I mean, that's a big deal, right? Um, we've been waiting for it for a long time. Those of us who are holding some Bitcoin and other crypto. So it's been a good week for sure. Not so much for the bears, but I mean, they've had a year and a half to make money. So it's our turn now. Um, um, of course, this was all driven by a slew of ETFs applications for Bitcoin, led by BlackRock, which is, of course, the biggest asset manager in the world with nearly $10 trillion in assets. Um, and of course, it's, I think, a narrative that's kind of catching on within the crypto space is that, oh, why now? And the timing is certainly coincidental, given the SEC's brutal crackdown on crypto this entire year, right? Since January, every month, every week, there's been an action or something. Every major exchange, or rather native, if they're centralized, we can say they're native to crypto, right? Every native crypto exchange has been hit by lawsuits, enforcement actions, fines, you name it, right? Pretty much driven offshore. And now it's these traditional finance giants that jump in. Um, anyways, we'll have to see, how it plays out. On the regulation front, we finally had some positive comments. We had the Fed chair say that stablecoins are indeed a form of money, and that crypto appears to have staying power. Something I never imagined I'd hear him say, but it was great to see. And I think that's flipped sentiment on its head. Honestly, a week ago, everyone thought crypto was dead. Right? It was Binance, FUD, Coinbase. Everything was, uh, you know, it seemed like everything was going wrong altogether. But all it takes is a few billion or trillion-dollar institutions to jump in, and we say, "Oh, it's all good," right? Um,
Yeah.
all right, so let's dive straight into the stories of the week, starting with BlackRock and the other ETF filings.
Right on. So yeah, as most people know by now, there were a bunch of ETF filings this week. BlackRock was maybe the most noteworthy. We also had Wisdom Tree and Invesco. So, and for context, Bitcoin ETF has been a holy grail. We got a futures ETF, could have been a year, even two years ago, and now you're seeing a flurry of traditional institutions apply, and that comes on the heels of many players, including Grayscale, having their applications for a Bitcoin ETF denied. So it's very interesting to see a renewed interest in trying to provide this financial product. Obviously, they're traded on public exchanges, so it potentially. I'm not super familiar with how deeply this will affect demand. Like, will this spur deeper demand? I mean, obviously, it's a huge show of support for cryptocurrency, which is kind of in the been kicked down and is in the dust right now. And it's interesting to see all these big institutions who have great information filing with the SEC. So yeah, it's interesting. Crypto, one of the main ways people get exposure in the United States has been through Grayscale's GBTC, which is a closed end account or product, which I'm not sure if I could define it as articulate as I would like, but basically that leads to a situation in which there can be a discount or premium as the underlying Bitcoin trades relatively differently to the amount of outstanding stocks of GBTC. So an ETF would create a product which doesn't have that premium and or discount, which would be very convenient for people because a lot of people have gotten killed on that discount, even as, Bitcoin has rose. GBTC has fallen much more, as for reasons I actually, to be honest, don't quite understand. But yeah, so it'll be interesting. I mean, assuming one of those products or all of those products get out, I think it has a huge. It just will be another way where crypto Bitcoin becomes kind of a boring everyday thing that people can engage with in the same way they do gold or something else. I don't know if you guys have extra takes there, but those are my top level understanding of what's going on. I apologize, I'm a little sick, by the way, guys. So
I think it's very significant actually because BlackRock being one of the largest financial houses in terms of asset management, it shows I think a sentiment that there's been a dynamic shift in terms of how these institutions are looking at digital assets. And there's obviously a play here by BlackRock, I think, from my perspective, given the regulatory climate, they definitely see an opening and they are taking it. So it'll be interesting to see how it plays out. And obviously, if they get approved, it's going to have, I think, lasting ramifications.
Yeah, absolutely. And I mean, I wouldn't bet against BlackRock because I believe they have a ridiculous success rate when it comes to ETFs being approved. I think it's something like 900 to 1 that
I
was
saw
denied
something like
or
that.
something like that. Right?
Yeah.
And it seems that they've taken all the SEC's previous rejections into account and addressed them in the filing of this one, right? So, yeah, I think it will definitely open up a new avenue of capital coming in because it's so much easier to hold something like an ETF in a retirement account or any stock brokerage account than it is to buy crypto directly, for one. And I think by now everyone knows that GBTC is a toxic product in terms of holding it in your portfolio. If you're a retail investor thinking, oh, Bitcoin was at what 20K or whatnot, and you picked up GBTC, you've barely participated in the upside that we've seen this year, right? And that's probably disillusioned a lot of people.
Yeah.
So, yeah, huge amount. It'll be a big deal if they're approved. Again, that's a big if. Big if being the first ETF to be approved. So
It'll widely expose, these assets to financial institutions, high net worth individual family offices that have not had a regulatory path to custody them. And therefore, it will potentially drive markets.
Yep, absolutely. And moving on to the narrative that I mentioned about, the timing being coincidental. Owen, you wrote up a story on this. Do you want to stick through it?
Yeah. So another huge piece of news of traditional institutions getting into the crypto space hit this week when we saw Fidelity Digital Assets, Charles Schwab, Citadel Securities, the massive market maker. They all collaborated with others, including Paradigm, the crypto VC, to launch a institutional crypto exchange, which includes trading with Bitcoin, Ether, Bitcoin Cash, and I believe Litecoin. And that, I mean, it's kind of incredible. I mean, some of the biggest institutions were, Binance's US arm, Coinbase have come under fire in the last 2 weeks. And now these institutions are coming in and launching their exchange. I mean, they had announced plans before to do so, but it is kind of wild that they're making a big play. And I mean, Cami, our head honcho and CEO, interviewed Caitlin Long, who's a very influential voice in crypto, Wall Street veteran, who's now working on a digital assets focused bank. And Caitlin Long said as much. I mean, in the story, I pulled her quote, which was, "All of a sudden, we've got these big Wall Street firms that are coming into crypto right after the runway's been cleared," she said. And yeah, I mean, I don't know. I think there's going to be a lot of digging and it'll be very interesting. And I think it brings up some mixed feelings in the crypto community because you see, crypto is supposed to be punk rock. Everyone kind of wants you to buy. Everyone wants you to buy. You want institutions to buy your bags, but you also want to keep it punk rock. And now, it's like, oh, the SEC is actually taking out all these companies which are much more crypto native, and now you have these very traditional companies coming in. So you're making money, but what does crypto look like in 2 years, and what does it do to DeFi? So all very open questions, which we'll have to see play out over the year. So
Absolutely. And just on that note, did you guys see the report from the Bank of International Settlements this morning about a unified ledger that combines CBDCs, general crypto, and everything else into one big happy platform, right?
wouldn't that be
So,
nice?
yeah. Let me see if I can just pull that up.
Yeah.
Yeah,
I saw some. Yeah, hit me.
All right. So, unified ledger, new type of financial market infrastructure, can harness benefits of tokenization, combining CBDCs, tokenized deposits, tokenized assets, everything. So,
Yeah.
we're all going to play well in the same sandbox, right? Yeah. Sounds great, but no.
Oh wait, are they going to launch something, or is it just like hinting that they'll adopt some other platform?
I think
Hard
this
to
is
say.
what they envision the ecosystem looking like, or they would want
Yeah.
it to look like, maybe.
Yeah. Right on. Yeah, we'll have to see. Yeah, I spoke with those guys a long time ago. Broadridge, they were those guys saying they're processing more volume than Ethereum by providing a blockchain-like solution for all of these different institutions. So I wonder if, I just wonder how all these like more quiet proprietary solutions are going to get involved or not. So yeah, we'll have to see.
I think, my for me, it was kind of something I hadn't really considered. But when the Eigenlayer founder came on our recap,
Yeah.
something he said really stuck with me, which was that Ethereum only has the bandwidth of, I forget the exact number that he mentioned, but what, 80 or 100K kilobytes a second or something?
Sure.
So if we're talking about scaling the world's financial system, which processes, I don't know, probably billions of transactions a day, like if we're considering it the whole thing, so we're talking about like from local banks to credit cards to everything. So there's certainly room for multiple platforms to coexist, I think, just to share the load. And down the road, does like one emerge as, like a megalithic kind of winner that takes it all? Maybe. But until we get there, and it's a long way off, in my opinion, like we've seen it, even like our newest layer twos like Arbitrum, etc., couldn't handle their entire user base trying to claim the airdrop at the same time. Right. So if our brand new tech can't handle it yet, not saying that's anything against Arbitrum or how they're doing it, but it's clearly not ready for a mass influx of retail use.
Yeah. And for a long time, the developers in blockchain circles have said, interconnectivity between various blockchains supporting different, transactions, is ultimately something that they were building towards. So it's not surprising to see that no one blockchain, given years of development, that sentiment has come to rise in terms of scalability.
Yeah, everywhere we see trade-offs in every project, right? Whether it's in terms of decentralization or security or just performance, I think Solana is a great example of that, right? Where they came in at the right time when Ethereum was congested, gas fees were through the roof. It was unusable for anything other than flipping NFTs, probably, because you knew that you could mint any garbage and dump it for 10x, right? Back in 2021. But you wouldn't do DeFi transactions with gas at 300 and stuff. Like, I remember it getting into a yield farm, just depositing money into a farm costed something like $1,000 in gas back then,
Jesus.
right? So it was absolutely unusable. And Solana came in and said, all right, we're just going to give you guys speed and cheap, right? And then it worked for a while until, some outages and like the flaws were exposed. And of course, SBF didn't help.
No.
Yeah. But I think everyone's learning from those mistakes, right? So we've seen Jump Crypto kind of come in and say, all right, we're going to take charge, fill the void that SBF left. And like, I think they're developing a new client, focusing on reliability and all that. So in times to come, I think all these layer ones could have traffic, assuming the overall crypto movement, if we want to call it that, actually moves forward, right? And if adoption continues, everyone should be able to get their piece of the pie.
I mean, at the end of the day, building all these layer 2s is like, because you can't get a piece of that layer 1 network. It's the settlement of value right now is taking place in networks like Ethereum and blockchain on the internet, the settlement layer of value on the internet. And so layer 2s are simply capturing the wake of that, because there is too much attention on those networks, which are right now struggling, I think, to scale. And we're seeing it. We're seeing it with high gas costs and high transaction throughput, or lack thereof, rather. So I hope we'll see it develop and flourish. We'll see.
Yeah, it does seem like layer 2s are a bit, I don't know, they're almost the layer 2s are the new layer 1. They seem like when people don't know, I don't know, you've seen, I mean, we saw Zora launch a layer 2 this week. We'll talk about it later, but Binance launched a layer 2 this week. Polygon is pivoting to make their POS system a layer 2. So yeah, it is. I wonder why I see. I mean, I like the idea of the. I mean, I don't know. Do you think the world is like the future is a bunch of layer 2? Like, I don't know. Do you think? I mean, obviously it'll probably be some kind of mix. But yeah, I just wonder what the mix of like layer 2s and even like layer 3s will be compared to base layer blockchains like Solana. And it feels like right now, at least, like the layer 2 thesis has a lead in the way that maybe 2 years ago it was like more about Avalanche and Solana and Luna. So
true. But again, I feel like that's still within the crypto ecosystem. Like we are interested in layer 2s and stuff. Your average retail user doesn't care what's going on behind the scenes, right? He wants to send money from A to B cheapest, which is why Tron still processes like God knows how many USDT transfers on a daily basis. Right? So even Ripple, right? Now they're suddenly like meeting with European regulators. I saw someone tweeting about some ECB rep or ex-ECB rep meeting with them and whatnot. So you never know like which platform eventually gains traction, or the banks themselves might create their own, which they're already trying to do, right? What was we covered it a few weeks ago. I forget the name of the blockchain, but yeah.
No, it's true. And it's hard to see that. I mean, I feel like with these kind of more proprietary solutions without a token, it's much harder to ascertain whether there's real traction or not, compared to, I mean, the publicness of an Ethereum or a Solana is interesting. So anyways, John Lee said everything will eventually be chain agnostic. I tend to agree. I don't think retail is going to care whether they're transacting on Ethereum or Avalanche or anything else. I just don't think people have time. So yeah,
absolutely. So let's move on to the market action of the week, which was glorious, right? We haven't seen candles like these in a while. So Powell's comments actually came towards the end of the week, right? We rallied on the back of BlackRock, and then the other filings that came on, and just kind of snowballed from there. So it's been kind of a trending week, right, where we started low and basically are ending up hopefully at the high of the week. Still a couple of days till the weekly close, but looks promising. In terms of top performers, I think everything's been rallying, right? We had Optimism up about 20%. They announced a funding round, grants program. rather than a funding round, which will distribute, I believe it's 30 million OP tokens starting in the fall. So they've kind of come up with this retro PGF system, which encourages people to develop first and then ask for compensation later, right? So it's build first and then like submit it, and if the community likes it, you get paid. So that's quite. It's a model that seems to be working for them. At least they're happy with the results from the reports and stuff that they've posted. They need to do something, right, to catch up to Arbitrum.
Yeah. Well, and crypto is such a get paid first, maybe do the work later.
I mean, ApeCoin DAO.
Oh man, yeah. Just collect that salary, do the ICO, and then get 100 million, and then you'll get to work, right? So
Maybe.
Yeah,
Hasn't happened yet. It's good though, they're putting the onus on the developers though to like say, hey, build something valuable, and once the community demonstrates that it is, you can get paid.
It's nice.
Seems to be working.
Yeah.
Yep. And in other market news, we had Bitcoin dominance that's risen to its highest level in over 2 years. This was a few days ago, so let me just see where we're at right now.
Yeah, we got someone
coming
in from Norway.
Nearly.
Right on.
So, definitely the highest level in over 2 years. And the whales seem to have known to buy the dip because, according to a report from Sentiment, where is it? Wallets holding between 1,000 and 10,000 Bitcoin accumulated nearly $3.5 billion worth in the last quarter.
Wow.
So amidst all the FUD, the whales were basically just sweeping.
Yeah.
Right. So we'll have to, of course, wait and see whether the trend continues. But it looks promising because criticism of at least the second pump in 2021, the one in November, was that it was mainly driven by derivative speculation and leverage buying, which is why it collapsed so quickly. So for a sustainable rally to take hold, you'd always want to see more spot buying. Like people are actually buying Bitcoin, paying upfront, and stashing it away in a wallet. That's the most bullish scenario you can have for any coin, right? Because leverage positions are always the ones, the weakest hands.
Yeah.
Right. Because maybe the trader himself doesn't have weak hands, but the market will liquidate him whether he likes it or not. So, so that's a promising sign for sure. And in terms of regulation, of course, we had France putting out a DeFi paper. Jeremy, do you want to walk us through that one?
Yeah, this was just kind of like a little handful of regulatory actions. France leading kind of the charge here with the AMF. They're publishing a paper that basically provided a definition of DeFi and offered insights into trends and risks in the industry. Now we've seen pressure from U.S. regulators across the last few weeks, and then over time, out of mind, practically driving businesses abroad lately and into jurisdictions that have more favorable and clearer regulations for crypto development and fundraising. And so, in light of that, the AMF has expressed support for kind of a global coordinated effort to regulation, balancing investor protection and fostering innovation in the sector. And I think this is a really good way for us to see regulators approaching this in a way that doesn't stifle the innovation that the sector represents, while still providing the consumer protections that are necessary so that we can have retail and other investors join the space with some reasonable risks. Regulators are also facing challenges to allow transparent and secure development, ensuring so those we can keep that development running across. So right now the AMF is looking for feedback from people so they can get an idea of what's going on and trying to create reasonable regulations. In the meantime, in the same kind of like regulatory roundup, we have Hong Kong implementing legislation. They're trying to attract newcomers. They've been ascertaining large growth in countries like Japan, Singapore, South Korea, United Arab Emirates, identified as regional hubs for Web3, and not the United States, you might notice. but these countries that are nearby are prompting them to take like a very competitive approach. And because of that, I think that we see the sector really booming outside of the United States. There's potentially a large market sector that we're not capturing, and this has to do with the regulatory approach. Crypto exchanges in Japan are also kind of rallying together to try and get borrowing limits, increased. I think after the fallout of FTX and other issues that we've seen in the industry, Japanese regulators have been always very, very strong about their regulatory stances. So they limited borrowing to like 2x maximum. So now a number of exchanges are getting together and preparing to present to the Japanese regulatory bodies a proposal to increase those limits in an effort to kind of grow the industry, because they think that they can do that. And in the meantime, Gemini, who has shuttered some operations, relatively speaking, and has some legal issues to face, on some levels, is also expanding into the Asia Pacific region. They've got a focus in Singapore. They've got a development hub that they're building in India, and it looks like that whole sector is experiencing a huge wave of growth. And it's, I think, been fueled by the sentiment that the United States is not a place where these companies can really get a foothold. And so until that changes, I would expect to see that growth continuing in those regions. And it's really not a big change from how it's been classically speaking. Singapore has always been a large technical innovation hub. The Asia Pacific region has always presented opportunities for these companies to incorporate and start moving and getting people, getting customer bases. There's a ton of debanked individuals in that region too that are the focus of a lot of cryptocurrency. And furthermore,
and the Middle East just jumps on every hot trend as it comes on. So
yeah,
that's why Dubai is making its move now.
Certainly.
All right, so let's look at a little bit of more specific DeFi news. CRV-USD, of course, is the stablecoin that Curve Finance launched about, I think it's been a month or so.
Yep.
And it features a very interesting lending liquidating mechanism. So it's, I think it's a lot better for borrowers in terms of not having the risk of being liquidated all at once at a set price, which happens on other lending protocols like Aave, Maker, or any of the anywhere really that you're taking a loan. This is quite a novel approach in terms of having ranged liquidations.
Yeah.
So,
and they're looking to expand, the basket of collateral assets, starting with wrap Bitcoin. And there's a proposal right now to launch a vault with a $200 million debt ceiling and a maximum loan to value ratio of 89%. So that voting, I think, started on Sunday last week and continues now. It's going to end on the 25th. So people, if you haven't voted and you want to, this is the time to do it. They've also initiated a similar proposal to onboard ETH, a native ETH, as a CRV USD collateral with a $200 million debt limit. And voting for that proposal is also currently underway. So it's time to do it. This is the second largest decentralized exchange. They've got $4 billion in value locked on it. But CRV token has seen a decline in value. So, adding to the value of baskets, or adding to the basket of things that you can borrow against, kind of makes sense, I think, in light of that.
Yeah, absolutely. And the design also ensures that, all the interest that's paid goes to VECRV holders, right? So it's going to boost the APY that the lockers can earn, because I believe, locking CRV was a huge thing back in 2021, even 2022. Everyone was doing it. But I think the rate of locking has dropped recently. I mean, along with the price of CRV, right? You'd expect that. Like, why would you lock something that's been consistently declining in price, right? You'd expect it to be worth a lot less 4 years from now when you unlock your tokens. So this is a great way to drive value to the token, I think. And the Curve team has always been the big brains in the space, right? Even when they came out with the first stable swap algorithm, everyone was like, whoa, like it was huge, especially for stable coins, because Uniswap is like at least the V2 of Uniswap is not the right venue for stablecoin trading, right? Because you want it to be forced closer to peg as the stable swap invariant does, because these are supposed to be like assets that don't move. Like you can't use the same mechanism for ETH USD and USDC USDT. It just doesn't make sense.
Yeah.
And we saw that, right, with many stablecoin projects that launched, including Basis Cash, where which was my first introduction, or rather first job in DeFi, I guess.
And maybe the reason that Curve is like so stable is because of its multiplicity of approaches in terms of like over collateralization, stability pools, peg keepers, maintaining the stablecoin's price. Like these things are very important. When we saw the depeg of like these like fractionally or algorithmically collateralized tokens, like they lacked a lot of these fail-safe mechanisms. So it's like very important to have like over collateralization, peg keeping. Like these things, like we see these tokens, these stable coins are the foundation of a lot of trading. And you know, when they fall apart, it's a huge deal.
Yep. All right, so let's take a look at something more. I wouldn't call it funny, but it's a curious development in the space.
Maybe just an example of like the community coming together. If anyone isn't familiar, Zach XBT is kind of a sleuth, a crypto sleuth. He's an individual that has gone out, or at least the individual has gone out and identified a lot of potential crypto scams, shed light on them, provided a lot of heavily sourced information with regards to what may have taken place. Community members are now supporting him in legal defense against a defamation lawsuit that was levied against him by one, what was his name? Excuse me. I don't know which one I want to go with, Machi, or should I call him Jeffrey? Well, whatever the case may be, the suit basically claims that Zach defamed this man's character and made false claims against him. And Zach has now turned to the community to raise funds in order to put that to rest. Now, if you're not familiar with the case, in a pretty all-encompassing report, Zach put out something saying that Machi had been involved in a number of pump and dump scams and had embezzled some 22,000 ETH, or at least been involved in the embezzlement of some 22,000 ETH, some of which payments were made from allegedly to some other members that were involved in this scheme. Machi summarily denied all of this and then filed a suit against Zach. Zach turned to the community saying, look, this has happened to me. I can't pay this. Please help me pay this. And he raised something like, at time of press, I believe it was nearing $800,000. I haven't checked it, but it's a massive amount of money from individuals that in the community that kind of banded together under the idea that this guy doesn't deserve to have to deal with this on his own and shouldn't. And, you know, for what he's given back, we're going to give him. So he may have moved it since then. Like, yes. And, you know, it's his to move.
Yeah.
Now, those donations to the legal fund will be going towards individuals, Stephen Pally, among others, who are representing Zach, trying to put this suit to rest. And, you know, I spoke to Pally briefly, and yeah, definitely bullish on this defense. Of course, if you want to look at it from the long sense, the lawyers are the ones that always win in these types of situations. So I wouldn't be surprised that he's happy. Now, I don't know if people are still donating to him, but if this does go to like a sort of like a settlement situation, he does have that pool of funds that he can turn to settle this suit, make it go away. And that might be the end of what we hear in terms of what's going on between Zach and Jeff. Hopefully, for Zach's sake, perhaps, and for all of our sakes.
Yeah, I hope it gets resolved amicably. I mean, I think it was the suit was filed just before the period elapsed, right? Like how long you can actually file the suit for.
That's right. It was like near the end of the timeline, the deadline that he had there. That's the limitation, the statute of limitation.
Yeah, absolutely. He's brought so many scams to light. I mean, people still give away their ETH to scammers, but at least we know who they are, or at least some
Yeah,
of them.
it's
It's
great.
interesting.
They're just crazy how much Zach he just gets done a lot. I mean, I don't know. I'm just surprised at how many people there are in the space. Even there would just be someone I've never heard of, and they'll have stolen
And so many projects we've never heard of, right? He'd be like,
so
"Oh,
many. Yeah,
XYZ project on this chain we've never heard of, just
yeah.
rug
Stole
like
two.
300K or 400K," which is
Exactly,
like
exactly.
we've kind of become desensitized to it, given the massive exploits that we've seen.
Yeah,
Tens, hundreds of millions, but
yeah,
that's a lot of money that people are, stealing on a daily basis.
It all
yeah.
adds up. Yeah.
Yeah.
And Zach's consistently providing these reports. It's obviously a labor of love from where I stand. He's out
Yeah.
there just digging.
Speaking of rugs, did you guys see the tweet from Arkham Intel? Was it yesterday or a couple of days ago, where a guy tried to rug a meme coin and then an MEV bot beat him to it?
Oh, I didn't see that.
So apparently there was some developer, he deployed a meme coin, and then, as usually how these things go, is the creator of the coin will mint like a massive amount and then dump it on the pool and take all the ETH, right?
Right.
So he attempted to do that, but a bot noticed his transaction and got to it before him. So
Nice.
so the rugger ended up losing, I think, 80 ETH or something, and
Wow.
actual
Yeah.
users only ended up losing like $5,000 something, which is still, I mean, you don't want to see users getting rugged at all, but in terms of blockchain karma, it was lovely.
Nice. Yeah,
Still,
that's fun.
it begs the question: who's running all these MEV bots? And where's all that money going?
Jared, right, from Subway.
Right?
Yeah. Jared
Have
from
another
Subway.
sandwich, my friend.
All right, so let's move on to some layer 2 developments that we had this week.
Right on. So, simple story. BNB launched a testnet for its layer 2. They're using the Optimism stack, which was developed by Optimism. And yeah, I was kind of surprised by this move. And sometimes I feel like some of these layer 2 moves are starting to feel like people who don't know what to do. They're going to launch a layer 2 because, I mean, from my understanding, Binance was already BNB chain was already fairly cheap and fairly well used. So I don't really understand what they're getting of I don't know, out of launching a layer 2. I mean, YYC, you were saying, we don't have the throughput in crypto yet, but like on the flip side, like I kind of do subscribe at least somewhat to the idea that we don't have the apps. So, it's interesting that people are.
I think the reason they're doing this is because, cheap as BNB chain is, it's now become more expensive than Arbitrum and Optimism. So
That's
they're
interesting.
doing this to kind of become competitive again, I guess. I mean, they still process a huge amount of transactions, like 2.5 million a day or something, which is double or more of it than Ethereum.
Yeah.
So yeah, I think I think it's a combination of both things. Like you said, they're tapping into the hot narrative, maybe as a way to distract from regulation and all the fires that they're fighting all over the world. I mean, Europe just hit them as well, right? They've pulled out of, I believe it was the UK, France, Netherlands. There's quite a few battles that Binance is fighting in Europe. So I think, a combination of that plus actually needing to become cheaper to stay competitive.
Right on. Yeah. That's well, that's I'm glad to know that. I haven't been following Binance's transaction fees, so yeah, I'm just skeptical of all these. There's that narrative of infrastructure, and everyone's just building infrastructure. Like, I don't know, Mantle. There's a new layer 1, and it's modular, and I don't know. It's like, it just feels like sometimes we're caught in the perpetual infrastructure stage. But this may not be the case. I mean, BNB chain is well used, so makes sense.
Hey, there's nothing wrong with copying stuff as long as it's good stuff that you copy. Right?
Fair enough.
So
Fair enough.
What was the quote? Right, like I can't remember it now, but it was basically that the copycats usually end up winning in the end because they iterate and refine the original product.
Yeah.
So
Yeah. Okay, and then we can move on. So Polygon is going to overhaul its proof of work or proof of stake chain, excuse me. And they're going to sorry, I just very sick. This and yeah, so they're going to turn it into a layer 2 and yeah, I mean, again, more push towards layer 2s makes sense. Polygon was a very big chain which was attracting a lot of attention early in the DeFi days and kind of has fallen out of fallen out of the limelight. ZKs are getting a lot of attention. So
yeah, don't you guys
that's
remember Titan and Mark Cuban farming it back on Polygon?
Was that on Polygon?
Oh yeah.
Yeah.
That was the original algo Ponzi, like Luna 0.0 or
Right.
0.1.
Very
Like that set
inspiring.
the stage for Terra and that model to take off, I think.
Yeah.
Yeah.
So
And-
go ahead.
Sorry, go ahead.
Yeah, it's just interesting. I mean, Polygon just keeps going. I mean, you always when they occupy kind of a unique space because they align themselves so much with Ethereum. So, like I don't know, like they I don't know, Avalanche and Solana are kind of you think of them as competitors, but Polygon really has positioned himself as like this kind of auxiliary technology, and they continue to do that. So they're interesting to watch in that way, and they seem to have done very well so far with that approach.
They've definitely persisted,
Yeah. They've kept going. They haven't faded. No huge scandals as far as I can tell. I was talking to a developer years ago, and they were saying they were really frustrated with some of the language they felt like that was being used around the proof of stake chain and how secure it was. I know Chris Black always talks about the multi-sig on POS. I assume that will actually become more secure with the layer 2. But yeah, it's interesting to watch Polygon do its thing for sure.
Yeah, I think this answers a big unanswered question, which was Polygon's focus in recent months or like the last year has all been ZK tech, right? They've unveiled a bunch of initiatives, and so people always wondered what the plan was for the existing POS chain. Right? So at least this clarifies that, because even with last week's Polygon 2.0 announcement, where they said, "Oh, we want to become, I believe, the value layer of something."
Yeah.
It kind of didn't really explain how the existing chain fits into the infrastructure. But now, if based on what they're planning to do, which is turn it into this Validium, which is something I had never heard of until yesterday, I guess it will kind of underpin the Polygon ecosystem.
Yeah.
So it would still be the main chain in a way.
Yeah.
Because you wouldn't want to ask $1 billion to migrate, right? Because you'd most likely have a lot of it leaving the chain altogether then.
Yeah.
So you'd rather sit on it, say, all right, you sit tight, you're still taken care of.
Yeah.
And go on to develop other things.
That's interesting. Yeah. And I guess it'll resolve to Ethereum layer 1 instead of one of the criticisms of POS chain, maybe the main one, is that it's basically a side chain, kind of a well-marketed side chain. So if it actually starts posting transactions to layer 1, obviously more secure.
So.
I don't think it does, though, because
really?
I think that's one of the features. Like, I'm just trying to see the story. So it says, so instead of publishing its data to Ethereum, it's just going to publish it to its own data availability network or something. Yeah.
Maybe I need to dig in a bit more.
Yeah. It says it's published off chain. Now, where it is, I'm not exactly sure, but not Ethereum. So I guess that's how they save money, right? Without having to publish anything to layer 1.
Yeah, because I know publishing data to Ethereum is so expensive. So, yeah.
It's not cheap.
Yeah. Well, I always see, I look on the gas leaders, and it's Arbitrum is always up there as like a top 3 in terms of contracts paying for gas. So yeah, they pay a lot of money.
All right, so let's round up the recap with some NFT news. Solana NFT activity doubled in May, which is something that users of the network I'm sure, would be happy to see, because Solana has really been one of the biggest casualties of the bear market, I think, from the heights that it attained to where it's fallen now. I mean, there's been quite a bit of recovery this year, but let's say going into December, January, right after FTX and Alameda collapsed, a complete mess.
Yeah.
So it's great to see signs of life. So we had these mad lads, which were which are trending now. I can't believe it's still PFPs. I mean, I feel like we're due for something new, right? I mean, PFPs are fine. You can use them as PFPs, but
no,
I'm
but
ready
yeah,
next the new paradigm.
Yeah, I mean, I just want like coupons for the grocery store or something. I want something I can use. So yeah, we'll see. Yeah,
going to come out and create like a JavaScript based game in their NFT that you can then stake your game into another game world and get assets out of that and play that. Like do something cool like that instead of it being just like this profile pic thing. And yes, I just came up with that idea off the top of my head just now.
Sell that thing.
Yeah, someone go buy that from me right now. That's no, but I mean, you're right. The paradigm shift away from PFPs we need to see, and the reason I bring up an example like that is because it shows like some utility that you could see. So some PFPs have been music oriented. Some PFPs or some NFTs have been music oriented. Others have represented like positions in LPs with Uniswap. The profile pic thing is really just one flavor of non-fungible token and how it can be utilized. So we really need the developers to come forward and say, hey, we want to build this utility, and then create a narrative around it for users to grab it and run with it.
And they have, you realize that Uniswap, the positions in Uniswap V3 are NFTs, and maybe, you see this growth, but just like maybe because those are one-off, you don't see them kind of trend in the same way. But I don't know. I just wonder if like maybe I'm missing use cases that are already happening just because, I mean, PFPs are by definition very public facing.
We got some clarification. Thank you for educating us a little bit. So Validium still posts the ZK proofs to Ethereum, but the actual transaction data is kept off chain, I guess.
That makes sense. So there's still an Ethereum endpoint there. It's just using ZK proof.
All right, that makes sense.
Which gives privacy and reduces the data.
This is just crazy. Just like reading the sentence, like it went from $150 to $250 in 9 months.
Yeah, I know. We were talking about that, and it seemed like crazy. I don't know. It seemed crazy, but it wasn't that crazy. I was just like, oh, okay. I was like, wow, things are pretty hot right now.
And I remember I picked up Soul, I think at $5 or something, and I sold it at 8, and I was like, oh man, great trade. And then I just watched it like skyrocket after that. I was like,
I mean, it's still a great trade. You took a return.
Yeah. Many people are happy with that.
Well, compared to treasury bonds, yeah. But in a bull market, that's a terrible trade.
Yeah. Anyways.
Big news in terms of Web3 gaming adoption, because we're finally seeing one of the biggest crypto native games, or at least the most established, I would say, apart from Axie and like some of the other names, has launched on the Epic Game Store, which has 230 million gamers, including card trading enthusiasts, according to the team and the release that they put out. So does this mean a new wave of NFT collectors is going to be joining the space? I mean, we can hope they come in and buy our bags, but we'll have to wait and see if gamers actually get over their resistance to NFTs, because we saw that in 2021-22, right? Like there was fierce hate from traditional gamers.
Very intense.
Like keep your speculative like trash out of our games.
Yeah,
that was the message.
yeah, it was intense. Yeah.
I think that's because too much of the message around NFTs is built towards price and floor action versus actually like the narrative of, hey, you own these assets and these aren't like bound in the game, they're bound in your soulbound account, or not soulbound, but they're bound in your digital account, and you can trade them to other people without the game developer telling you what you can and can't do with it, which we haven't really seen a lot of outside of things like, you know, a few things like Team Fortress has a marketplace.
Yeah.
Diablo 3 had one for a little while that I participated in when it was a cash marketplace. You could buy stuff and sell stuff to people, and Blizzard took a little cut of that, and they ended up having to deprecate that model, and I don't know why. Mainly because it was probably game breaking. So it's not the first time we've seen it. I think these gamers that are coming into that game through the Steam marketplace, it's more like they're going to be owning these things in that game interface, and it's less likely that they're going to come through and then come into markets. They're more likely to like start to accumulate these things in the game, and then once the utility of owning this and that becomes clear, then people are going to say, well, hey, how do I start to win? How do I game this? How do I like pay to win or do whatever I need? How do I strategize here? And then through the strategies that are introduced through gameplay, through that game theory, then we're going to see market trickle. So it's probably not going to be, in other words, a big shot in the arm. It's probably likely to be more of an organic thing, which is better in the long run, I think, than it is to have just a boom of individuals come into the market, spend a bunch of money, and then dissipate, because that's kind of the nature of those types of situations.
Yeah, I like that. Yeah.
And we can see that from the price action of most GameFi tokens, right? Like they're down. We can say they're pretty much at zero, right?
Yeah.
In terms of comparing, like down 95, 96, 98% is quite the collapse.
Yeah.
But despite that, more than 700,000 people are still using these games, right? According to DApp Radar. Plus, blockchain games and metaverse projects raised nearly $500 million in May alone.
Wow.
So clearly, I mean, there are investors who see something in the sector, like that it's not dead, or that it has potential to come back. Maybe not the projects, the existing ones are probably dead and buried, or will have a tough time to come back, because especially when it comes to games, I think it's very difficult to re-attract a user once you've lost him.
Yeah.
And one of the biggest critiques of Axie was that it wasn't fun to play to begin with. Right? It was just basically a yield farm with some characters and like
some animation
gameplay
laid over it. Yeah.
So
well, what we're starting to see now, and I saw this at 3XP, is that game studios are starting to see, how can I integrate things like the Unreal Engine into these blockchain games? And how can digital assets start to become the background of these really high fidelity, rich gaming experiences that go beyond the sort of kind of wishy-washy next generation Pac-Man sort of thing that we've seen iterated in the current Web3 model? And that is something that I think has the power to excite gaming audiences, because now I'm playing in this Call of Duty style game that has a digital asset incorporated with it. So like there is a loot factor here that might stimulate me to want to play this game, I want to turn around and buy this game. And I might sit through the advertisers that put their content in this game, because I know that I'm going to then get a chance to win maybe this cool prize or something like that. And I think there's a dynamic there that gaming studios really believe in, are starting to pour their money towards. And we saw that with the growth that was exhibited by participants at 3XP, and also some of the announcements of the gaming syndicates that are coming out of there, so I wouldn't be surprised to see, GameFi as a huge growth sector in the next, few quarters.
Yeah. Now that you guys talk about it, it feels like there hasn't really been that. It hasn't really popped off. People have talked about it. And I know games are very hard to make, which everyone talks about. It takes a very long time and a very big group of people. But yeah, if you plop some valuable thing in the center of some map, I'm not really a gamer, and let people have at it. Like, people would do that if it was real and digital. Yeah, I don't know. It's interesting.
And YYC touched on this too. A lot of these tokens that we've seen deployed are down, and that's because, well, they might have made a fun-to-play game, but they didn't nail down the tokenomic model. And if you think about how games are developed, there is an economy in games, and so if we're developing games in Web3, we need to take into account how the tokenomics interface with that economy. And if it's all just play to earn, and then the only reason the token exists is for you to sell it to take your winnings, you're gonna see a token's value diminish. It's gonna go straight down because there's only sell pressure. So there need to be reasons to incentivize users to collect those tokens and then sink some of those tokens that don't go into the marketplace, rather, but like burn them in order to create scarcity. And these are things that developers, they can't just. It's not enough in Web3 to just build a good game. You need to also build an economy interfacing with that game and take into account the game theory. And so it's a very, very complicated puzzle, but I think a rewarding one to solve for the game studio that cracks it, right?
Oh yeah, it'll be $1 billion game or more.
Oh yeah, I'll play.
I mean, we give $1 billion valuations to complete vapors, so a working game would be 5 billion easy.
Yeah.
Right? So, didn't Illuvium hit like 800 mil or something back in the bull? I think so, or close to $1 billion. Might have even crossed $1 billion. So Owen's working on a story on the whole Ape and Yuga saga, right? The ongoing drama and whatnot. So do you want to give us a sneak peek into the story?
Sorry, guys. I was very close to finishing.
Give us counsel.
Yeah, right. So long saga. I mean, basically, these elections for the special council are coming up. ApeCoin, which was launched in March 2022, just hit a low this week. And there's just a lot of confusion around how these people on the special council, who are kind of vaguely assigned to deal with the administrative duties of the ApeCoin DAO, they're getting paid like roughly $20,000 a month right now. There's new elections to decide who, two new people are going to take over the helm. It's a 5-person group in total. So there's just a lot of questions about what they're doing. And honestly, I started out more skeptical, and then having talked to some people, listened to some spaces, it is like, I don't know, I kind of understand what they're doing a bit better. And you can criticize them. They haven't gotten much done, but honestly, I went in their forums and I could kind of see what was going on, which in some DeFi protocols, honestly, it's sometimes I'm like, I don't know, they even seem less organized in some ways. Maybe it's just more complicated. But anyways, they're kind of struggling, and I'm trying to understand who does what. Yuga Labs is its own $4 billion company. ApeDAO has a $1 billion treasury, and trying to understand who's responsible for what it seems like what they're struggling with, and the hype is kind of gone now. It's like, what are you doing, and a lot of people, they're looking at games, but yeah, I mean, it's interesting. It's like Bored Apes was everywhere. They partnered with Rolling Stone, Eminem had one, Justin Bieber, Steph Curry. So it's like, they have everything, but then it's like, well, what do? You're trying to become like a Disney? Are you trying to become a Louis Vuitton? And all kind of in decentralized ways. It's interesting. They're almost more interesting when they're struggling than when they're top of the world. It's kind of obnoxious, but it's more interesting to see them kind of establish themselves, try to, as a luxury brand or something. So that's the highlight.
Yeah, it's definitely Yuga's trying to understand itself, I think, in this climate, and kind of self-examine. And while it's doing that, there are other councils that have there's Downs DAO, right? And we have a really, really solid form of governance coming out of that. And then we have, ApeCoin's council, which is perhaps the polar opposite from the community perspective, given some of what has been voiced in the community and the concerns that have been made there about how people are getting paid. And it's perhaps somewhere in between we can find, hopefully, a path for Yuga to try to get towards more of or at least for the Ape DAO, to have more of a consistent kind of existence versus it being just kind of like, well, the coin's going down and people are unhappy with the council in general and wondering why is there $100,000 monthly sink of money for nothing.
Yeah, I think the bear market is kind of exposing a lot of waste in a lot of DAOs. And people are finally waking up. Like community members are like, in the bull market, no one cares, right? Because your bags, you're flying. You're like, all right, who cares? Like we're getting rich. Everyone can get rich. It's fine. But when you see a protracted bear market, that's when you realize, hey, like my coins are just down only, and these guys are sitting back and collecting free money essentially, right? So maybe not free money, but are they? Is it worth what we're paying?
Yeah, that's a major salary. Yeah,
right?
yeah.
So we saw that with Rocket Pool as well, right? So Chris Black came out with huge critique saying that the Oracle DAO members were making, I don't know, 50K a month or something in RPL because RPL pumped, obviously, given with the LST narrative. But now they've come out with a proposal to reduce that, etc., in response. And I don't think it'll be the only ones. There'll be a ton of places where I noticed in an NFT project that I'm in, Anata NFT, which keeps quite a close kind of watch on their treasury and costs because it's DCF God is one of the guys on the team, so you won't expect an RFV raider to let anything slip. Right? So they just basically reduced the size of the team and like laid off one of the artists, I believe, just to kind of, because they say, hey guys, the market's dead. There's no point in us wasting money on like doing things which aren't going to benefit us right now. Like we'd rather save the powder for later or whatnot. And smart projects do this. Other projects just rug the treasury and vanish. And in NFTs there are so many slow rugs. Right. It's and the worst ones are not even the ones that just rug the treasury. The ones that farm royalties, those are even worse because they'll do an announcement that'll hype it up, saying, "Oh, we got big things coming," so people buy in, so they collect those royalties, and then they say, "Oh, nothing's delivered." People dump it, they collect royalties on that as well.
Let us cook, guys. Let us cook.
Yeah. I know. I was talking to the DAP Radar woman at DAP Radar, and it was just, I don't know. Her calculations was higher than other ones I saw, but it's like, Yuga had made 100-something mil on royalties back in November, and so I mean, some of those companies are just printing money. I mean, Yuga is obviously the biggest one by far. They accounted for something like a third of NFT trading, and if they're collecting royalties on most of that, they are printing money still. So, anyways, we'll see.
I mean, we've seen it, right? Being a founder in the space, whether it's DeFi or NFTs, is the easiest way to make it. You want a beach house or a chateau in Switzerland, that's the route.
Yeah. It does seem like you get a lot of,
especially in a bull market. I mean, so many projects raised tens of millions and just vanished. No one talks about them anymore. Like the communities of like Discords have been closed, Twitter deleted, and just gone. Right. So,
and it's in a space where these weren't securities. It wasn't like a part of a company that you bought. It wasn't registered or anything like that. You were betting on somebody and giving them money for a token, and that token wasn't necessarily tethered to anything, to turn a phrase.
Yeah. I mean, there was at one point when having a roadmap was a negative, right? At one phase of the NFT bull, if you guys remember, like no roadmap, no promises. All right, pump this to 10 ETH.
A non-team. Oh yeah, here, give them all my money, because when the team reveals, it's going to be this famous person and it's going to make the floor.
Oh yeah, that was another meta. I remember back then. I mean, we really speculated on anything. Like we deserve to have our money gone, so it's fine.
Stop saying that. I need my money.
No, I'm saying like some of the questionable mints that I did in the bear market, like looking back at it while I was doing my taxes, I was like, right, yeah, this was definitely a well thought out investment decision.
But in all seriousness, though, we've seen some of these things that make no sense take off and be huge,
Yeah, look at these black rocks.
Yeah, the Black
Like,
Rocks.
I showed it to you guys where it was trading at 0.03, and I was just laughing. I was like, haha, look at this. And the next day it's like 0.6. I was like, what? What happened to this?
You showed that to me at 0.03?
I did. I shared it in our print channel, man.
All right. See, I'm too busy writing. I can't be degenning out now.
Anyways, so I think that brings us to the end of this week's recap. And thanks so much for joining us, everyone. Unless anyone has questions, I think we can wrap up. Right?
Thanks,
and
guys.
have a great weekend, everybody.
Indeed.
All right. Take care, y'all.